From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 7, 2016. In just a moment, we'll be taking a look at the EURUSD, the euro versus the US dollar for today's trade analysis. But first, a recap of a couple of the suggestions made over the past few days in the live trade room and in the morning analysis video yesterday. We started with the GBPUSD, Great British Pound versus the US dollar, studying the pattern of the trend. It's a little bit difficult to see it, but there's a blue box right here. So we rose from the bottom, we hit the low, came up, went into a range here inside this blue box, broke out to the top side. A little easier to see this black box, went into a range. Yesterday, we were at the bottom of the black box into support right around the 14400 level. Taking a buy at 1.4400 was the opportunity for yesterday. And as you can see, the market did rise off of 4400, moving all the way up into the mid to upper 4600. So quite a decent amount of profit on this currency pair. Let's go ahead and take it down to the 4-hour time frame. Of course, the buy is down here again, close to 4400, and you can see the rise. Profit was taken on the way up. We took some profit here at the orange shaded area, took some profit at the purple shaded area, and closing the remaining of the remaining trade as it pushed into the mid 4500. So the trade is now closed, but significant amounts of profit made on this trade. From 4400 where we entered the trade, even if you closed it at the orange shaded area, you're looking at 70 pips. If you closed it at the purple shaded area, 130, 140 pips. If you close it at the pink zone, close to 200 pips of profit on the trade. So significant profit made on yesterday's trade analysis for the GBPUSD. Now, in the trade room, we discussed the possibilities of buying the NZD-USD, New Zealand dollar, US dollar around the 6,900 level. The pattern of the trend was what we were looking at. Of course, we saw the rise from the lows last week into congestion here in this little blue box. Broke through the highs on NFP last week, came up, pushed through the purple shaded area, 6,900, came down, found support into the purple zone, and now the rise back into the orange shaded area. So we're closing profit already. We've already closed a little profit into the orange shaded area. Of course, if it can break above here, we'll look for further profit as it continues to pressure back into the 7,000s. But for right now, we're at resistance. We want to protect profit. I've moved the stop loss, locked in profit with the stop loss into the orange zone. We're sitting 48 pips of profit, so I've locked in with 5 pips with the stop loss. And again, closing profit already into the orange shaded. If it breaks through, we look for it to go higher. If it bounces off and goes back down, it's a very good chance we see it back down here towards the purple zone or a breakout underneath the blue box that we have here on the chart in the purple shaded area. We could look for it to turn around and go lower. So purple zone is 69.15 down to 6,900. Orange zone 69.50 up to 69.80. So resistance at the orange zone, support at the purple zone. Right now we're into that resistance. Protect profit if you have it from the trade suggestion from yesterday's trade room. All right, let's move on over to the euro because I think we're looking for something very similar here on the euro that we just discussed on the New Zealand dollar. We saw the rise from last week's NFP numbers. It's started to move higher. So if we're going to buy it in the direction of the current momentum or current sentiment, let's say here for the euro dollar, we would look for buys on dips into support. We'll look for a period of congestion similar to what we saw over there on the New Zealand to develop support. Buy it and look to target the resistance levels or higher. The risk, of course, becomes smaller the lower it gets and into support. So we know that long term, we have this uptrend. Let's take a look at the trend line here. This red trend line bottoming out down here. The lows of the trend line start down here into the 1.0500 or so level. The midpoint here in March where it bottomed out here right around the 108.50-40 level. And then, of course, the current area where it bottomed out last week into the 1.1100 level. So we have that long-term red trend line. The black trend line came down, hit it, bounced up. The blue trend line came down, bounced up. So that's what we're working with, the rise off of the red trend line and in the direction of the longer-term trend, especially the spur on from momentum from last week's NFP. Zooming in one more time here on the daily time frame. Take a look at this orange shaded area. You look right here, you can see some congestion in this area right here, not too far back into the 1.1300 level. You look far left-hand side of the chart, you see that orange shaded area, 1.1300. So we're looking right around 1.1300, 1.1320 as our current area for support here for the euro dollar, given the history around that level and the historical support resistance and congestion. That becomes our first area of support, just above 1.1300. Current resistance, of course, is the blue shaded area there, 1.1355 to 1375. And for the past 3 days, Friday, Monday, and now Tuesday, holding resistance into that blue zone. So the clear point here is that we don't want to buy it into the blue zone. That's resistance. Don't buy it underneath the blue zone. The only reason we would buy it would be a dip to support, which we've just listed out as 11300, or a push through the current resistance level. We'll call it 113.75. If we get through 13.75, then maybe we have an opportunity to go long again. But I think we're looking for support. Remember, if you're going to buy something, you want to buy it at a lower price, not at a higher price. So we need it to come down. 4-hour time frame. Let's just zoom it out a little bit. Congestion, obviously, underneath the blue zone. If we're going to buy it, we want it to go down. I'm not sure it'll make it all the way down to 1300, but definitely would be a bonus if it could make it down that far to give us lower risk and higher reward. At least at this point, I think your risk is underneath the orange shaded area and the 11300 level. That's where your stop loss would be. So the closer it can get there, your stop loss becomes smaller for going long here for this currency pair. So right now we're kind of in waiting mode here on the euro dollar. We don't have a lot of high impact news on the calendar for the day today, at least during the U.S. session. So what we'll be looking for is a dip and support to develop. Now, I don't want to take a buy just as soon as it hits it, but I want to see support develop above 1300. Then we will look for an opportunity to go long again, targeting the blue zone, green zone, or higher. The risk in that scenario, of course, like I said, is the breakdown of the orange shaded area. So at least at the current moment, we're in waiting mode on the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.